May profits be upon you. Here's an update on gold. All right. When I set out my video, I believe I was here somewhere. Yeah, it was price was right around here, right? And I put an arrow up. I said it's probably going to go there and come on down. And this is the arrow I used, right? I said this was my POI, and I was looking for a order block, a bearish order block that I believe price would reverse. That price would reverse from, and price did reach the POI yesterday. All right, and you see where price is now, and you should be in good profit if you follow this. If you follow this trade idea. Now, I don't know if you're in the same kind of profit my team is in, but I'll go over what your entry should have looked like, because as price reached this POI, the first thing I do is I go to a lower time frame because I want to see the price action in more detail. So I'll go to the 15, right? And what am I looking for? Once price reaches up here, I'm looking for a transition of price. What do I mean by that? I'm looking for price to show it is transitioning, shifting from bullish momentum to bearish momentum. And there's only one thing I like to look for: head and shoulders, or what is that? Quasimodo. I'm still looking for the same situation: high, higher, lower. I'm looking for a head and two shoulders. That's what I'm looking for. That's it. This one's better for me though. Why? Because when it breaks structure, when it goes higher and then breaks structure to the breaks this higher low, that's breaking structure, right? And that indicates that price is probably highly likely going to go lower. It comes back up as a return to impulse, and that impulse is usually to an order block somewhere by the head or within this leg of structure. And the right shoulder will come up and test that, and that's where I like to enter. Boom. That's it. Now look for that same entry on every time frame. Now there are more confluences and other factors that I factor in, but I leave that for my mentees, right? Here it's just enough to know that's what you need. You need to see price transitioning. I It wasn't as obvious here as it reached this peak and then started going down, so I didn't take an entry. Excuse me. I wouldn't recommend an entry here, right? You know, it's doing the isometric triangle there. You know, this equilateral triangle. Excuse me, and uh, and then you see it break down to the downside and then come back up. You know, I'm not messing around with that mess. All right. Now, some people would have said, "Well, what about this situation here?" Well, what about that situation? Now, if I see a break of short-term lows, two short-term lows, or a break of actual structure, I see that break and then a return to impulse, then I'm interested. I didn't see that here. Okay, I just didn't see it here, so I didn't. That's wouldn't recommend an entry. All right, but price stayed up here and then came up here, and I'm like, oh, okay, wait a minute now, hold tight, hold what you got. All right, I'm always looking over here to the left, and I'm saying, okay, this whole thing here, this up move is the is your order block, your bearish order block. The last up move, not the last green candle, not the last bullish candle before the down move. No, the last up move before the down move. All right, that's the way I do it. And when price enters into that AO, it enters in my POI. All right, that's when I start looking for transition. All right, so we come over here, right? We got this high part. Oh, I like that. Now, with the come on now, with the high identified, right? I'm looking at this high. I'm looking how we came up here and snatched this liquidity up here, and that's usually a telltale sign. If price is going to snatch liquidity, you'll see a wick. It'll wick up, and then it'll go the its an intended make its intended move. Right. This is a protected price point. That's why there's an order block here. All right. This is a protected price point. The price was a break that with a close, not a wick, but with a close above of that price point. Then at that point, that invalidates taking the shorts. That invalidates all shorts. All right, I would be looking for longs because that would be a break of structure to the upside. Then I would be looking for a return to impulse and then a continuation of the upward momentum. All right, so we're over here now, right? So I see we reached the high point. I'm looking at how that high point got there. We got to pull back here, a little pull back here, a little pull back here. This looks like a shoulder to me. All right, we got this head, and then this is the important part. The important part to me. This is a break of a short-term low. After that bearish candle and then the bullish candle, it created this low. It's a short-term low, not structural, but a short-term low. There's another one over here. All right. I only count that bullish candle because it was preceded by a bearish one. So there was a down move and then an up move, creating this support. Right. Two short-term lows. What did I tell you? If I get two breaks of two short-term lows and a return to impulse, I'm interested in taking that short. All right. That equates to a break of a higher low. All right. What made this high? What made the higher high? It had to be a higher low. Now I look for two candles in a row. All right. Two consecutive candles that um, trade outside the range of the previous candle for to consider it a pullback. All right. To consider it actual structure. In this case, it's kind of small. All right. But it is legal, you know, but it does come down lower and then here. So I'm looking at this as one leg of structure from down here. All right. A break here, I would consider because I'm looking at the larger picture here. All right. That is a higher high. So this is would be the higher low. I'm looking at the larger structure, the larger, higher time frame structure. You understand? All right. So, but I got the break of two lows here. It breaks down, and I'm looking for that return to impulse. Where's the impulse at? Ha ha. There, this is your IC candle. That's the last up move before the down move. You heard it here, folks. All right. And let me see. Let me get this down right. Yeah, there you go. All right. And I will stretch it like so. Right. So when price breaks, gives me some daylight and then comes back, I like to see price come down, go away and come back. I like to see daylight in between there. All right. Those are the higher probability trades. That's just my back testing. Okay. You do your own back testing and get your own data. But the fact that it broke these two short term lows and came down here to these lows where there's some liquidity come and get, you know what I mean? That's important to me. So when it comes back up here, I'm not looking for any more transition. This is the transition. As long as it doesn't violate that head, now I am then looking at the shoulder, looking at this head, and then looking at this right shoulder. Here is my entry. Now, I could have a pending here at the halfway point of a larger bullish candle or IC candle, the institutional candle. I will go to the halfway point and I would have my stop loss the above the order block in which I enter. That's the rule. All right. And, and my entry at the halfway point. Sometimes, depending on the body, depending on how big that candle is, depending on that candle, I'll have my entry as a pending here, and I'll put my stop loss. Yeah, it depends. It depends on the how the order block is actually made. And let me see. So looking here, looking here, looking there. Right? And my buy order would look something like that. Stop loss above, halfway mark. And you might say, where do you TP? Come on, man. TP, you're always targeting the lows. You're always targeting the lows, right? This would be my first TP. Actually, that's not where I would take my first partial. No, it's not. I would target here. I would target here. Let me see. Let's do it this way. I would target this one, and I would target this one. Yeah, this is a good one. Yeah, and that probably be my final TP right there. But I'm going here. I'm going to go here. All right, and that would give me about a 1 to 7 with that stop loss where it's at. I love the transition. I love the fact that price went away, came back, and I like uh, the bearishness of this structure because we are making lower lows, and I like that. All right, we aren't making higher highs anymore, and we are in a larger. This is a daily order block that was actually violated here, but you can see that it was just a grab for liquidity, which is over. Watch this, over here, and I thought price would come up and get that doggone TP. I mean that liquidity, and it did. When it does that, it usually means it's going in the other direction when it wicks above and then comes on down, right? This is, I believe, a weekly. So we ran into all of this heavy supply up here, tapped into it. So I'm looking for price to come on down to these levels again. All right, but I'm going to target here. I'm probably going to. For me personally, I will be looking to TP here. All right. When it gets down here, if it breaks, if it's a straight hard bearish count, a bearish candle, if it's a hard hitter, then I'll look to leave a runner. Okay, but anyway, that is my helpful hints, and I'm hoping that you found it beneficial. I'm hoping that you are enjoying some doggone profits here. Okay, if you are, you better make sure I get some feedback, a thumbs up or something, man. Just let me know I helped. That keeps me going. That's what I live for here. I'm putting out this information. I'm not getting paid to do it. You know what I mean? So I need the feedback. That's what I get from you. That's what I ask of you. I need some feedback. Some good comments, bad comments. I don't care what it is. Say, hey, you just got lucky, sucker. Say something. You know what I mean? I would love a comment. And if you want to give me a thumbs up, feel free to do so because they mean something on this platform. They actually mean something. They help grow the subscribership and they help my channel grow. Okay, I will see you in the next video. I hope that you are trading safely and be careful because you have FOMC tomorrow. Okay.